But one thing that very little people know about is what's called the rule for what we call real estate professionals, as determined by the IRS. Doesn't mean you have to have a real estate license. And this is how you can shelter your income even further. Okay, so a lot of you all in the room make over 100,000 a year. Some of you make over 150,000 a year. You can't take the depreciation write-off if you're making right now to offset your ordinary income if you're making over 150,000 a year. It gets what we call stored up in the property. So you don't lose it, you just can't use it. If one of the other spouses become what's called a real estate professional, they can shelter, then that rule goes away. So like we said, the 10 properties that throws off $70,000 in depreciation, if I'm making over 150,000 a year, I can't use it.
Is that combined or?
Yes, yes. And so here's the rules on becoming, you have to be involved like you are, you have to be involved in real estate investing. But that could be anything. It could be research, it could be all the things we just talked about. And the government has some rules about that. But what it is that you can, let's say doctor makes $200,000 a year. He can't take that depreciation right off now. But wifey, who was an engineer, decided to stay home with the 3 kids. And that's exactly what the Nelsons are doing. And now she's become an investor. She doesn't bring any income, but because they're building up all these properties, the $70,000 or $80,000 depreciation will shelter his income. So what does that mean? With all this write-off, they have what, more money to invest in more properties. So this is a little known rule. You have to, this is the rule. You have to be real estate activities like leasing and management. Research is even good. Or when you go on a trip, you can count the hours. You have to have 750 hours in these real estate related activities. 750 hours. And a year, so that's 14 and a half hours a week in real estate. And here's the one that kicks most people off. 50% of your income producing activities of your time in the week have to be in these activities. So if you're working 40 hours a week, the government's going to say, no way you're working 40 hours in real estate. That's how they keep people from abusing it. But it works great when one spouse can't maybe working part-time or not working at all, and here she is taking care, or he, there's a lot of stay-at-home dads taking care of these properties, building assets with the income, now sheltering it just by using this little known rule. So keep that in mind. That's something that a lot of people don't know about.